Good afternoon, everybody. Welcome back to the Opportunistic Trader. We're joined again by Tracy Shuchart. Tracy has been very active in our chat room in the commodity area, but she focuses on crude oil, S&P, Euro, some metals. She really has an interesting way of looking at the markets. Last time we spoke, she took us through the TPO charts that she looks at. And I know Tracy wanted to take us through a few different technical setups that she looks at. Tracy, how are you?
Good. How are you?
I'm good. It's been an active past few days in the market, and we have a lot to talk about. But I know we wanted to take a look at on our screen. We have some other technical charts that you look at. So tell us about what we're looking at.
So basically, this is the footprint chart that I use, and Can you see my cursor?
I think we can.
You can? Okay. So basically what I use for the good thing about crude is that the entire book is open, unlike a lot of the other products. So this chart comes super in handy for that because I can see where all the big orders are. So first thing I do when I look, I want to see where the huge orders are. Now, it's kind of late in the day. So most of them have already been filled. If you'll see I kind of look at this in the morning and say, where are the big orders? There's a bunch of big orders down here or a bunch of big orders up here. Where is the market likely to go? Is it likely to go in that direction, in the direction of where the big orders are, or is it going to be spooked in the opposite direction?
So if you can take me through, actually, this looks really interesting. So if you can take me through the left side of the chart, the blue bar chart, and then what the middle looks like, what exactly is all this saying, starting with the left side?
Basically, so starting with the left side, this is just volume on the day. This is only set for one day. So this is just volume on the day where we've been trading at just your normal volume. POC is right there. Then this will be this area is where all your buys and sells at each price are happening. These are just 5-minute bars. You can use different setups. Some people use point and figure. Some people use minute bars. I prefer 5-minute bars. And you can tell basically what we're looking at. It's kind of opposite of what you think. Is these are the buys, and then these are the sells. These are hitting the bid. And these are hitting the offer. So what you want to be looking in here is basically if you're a footprint trader, what traders are looking for is something like this where they bought the top up here, and then they would look to take a short there. Now we've been kind of rangy right now, so this is a weird time. I mean, if you look at the chart, we haven't really gone anywhere, but those are the kinds of things that you would be looking for. Or you would look to right here where they sold the bottom, and then you would be looking to go long there. That's kind of if you're an intraday kind of scalper kind of trader looking at that. Although you can find edges that way when you're trading if it coincides with other levels that you're looking at.
So if you take a look at right now, like you said, it's the end of the day, so not as much. But what do you see in terms of the book right now and the footprint that might give you an indication on things?
I think it's kind of hard because this is the day. But if you'll notice, what I look at right here is these are the numbers of bids or offers. So when I say they're skating right now, this chart looks like they're going up because you can see right here that they're adding to the offer. And down here, they're skating the bids. Skating meaning they're taking away from it. So when I look at something like that, and sometimes it's very obvious, especially in a trending market, that can help you kind of stay in a trade. But right now, it looks like, they keep, I noticed this earlier, they kept adding to the offer up here. They started skating bids down here, and hence the markets started to move up a little bit. Now, it's not as pronounced. I mean, that's kind of a little bit nuanced. But during, when it's not really the end of the day, you can really tell it kind of keeps you in the trade. If I see they're skating all these bids down here and this is packed with offers, it's all white, and they just keep adding to the offer, the market's going to be pulled up that way. So it can help you stay in a trade longer. not necessarily, initiate a trade, or it can help you if there's a certain level that you want to trade and you're looking at this screen, you might decide, no, I don't want to take that level because it looks like it's going to fly past it.
Right. And now this is called a footprint chart. What sort of technology are you using right here that you're showing us? Like what trading platform is this?
This is actually Ninja Trader, and this is Auction Dashboard. The only Ninja chart that I still have, because I haven't found another footprint chart that I like as much, or that is as detailed as this. I mean, some of it's really technical, like a lot of this is really technical. If you were a scalper, this would be, really good information. But you can also see kind of, this gives you where the market's been trading at all day. You can kind of see where the bulk of the market's been trading down here, where there's more of edges up here, and then,
And then on a day like today where we had the DOE data at 10:30, what does this footprint chart start to look at? Like, right when things get pretty volatile, right at 10:30, does everything clear out?
Right at 10, you'll see like 30 seconds before everything clears out. It goes completely dead. And you can see that in, other sort of charts too, where the liquidity is just sucked out. And you can see that happens really on any kind of data announcement. If you're looking at ES or anything like that, you'll see the same kind of behavior from this chart where literally everything's pulled.
Mm-hmm. Now, do you use this in coordination with the TPO chart, or is this something that you look at?
The TPO chart is kind of more of something that I look at to, the broader picture of the market. What does this market structure look like? Where do we have weak spots? Where we have things like that. So it's more of my top-down approach, the TPO chart. Whereas this is something that I'm watching intraday trading all day.
Right. Absolutely. Absolutely. Now, is there a way to look at this on a multi-day chart, or is this best just used for intraday?
It's best just used for intraday because, there's so much information there. I mean, if you're basically looking at a candlestick chart, but you're looking at every, how many trades per bar in a 5-minute bar, right? So basically all this information is kind of if you were looking at a 5-minute chart, right? It's all your candle information. And this is just inside what is happening within the candle.
Yeah. And then on a really volatile day when we're making new lows, it's one of these days where we just have no bid and it's just going, $3 down, 50 cent, 50, is this the sort of thing? Do bids continue to pop up that you see, or?
Oh, sure. I'm trying to find something like, if you notice, like, I'm trying to find when 10:30 was, like, say when you'll see when this market. So a lot of times you'll see like this will happen. This is at 10:30. What this will happen is today wasn't as bad, but you'll have a lot of these where you have unfinished auctions here. An unfinished auction would just be if you have blanks, right? It just blows past the bidder offer, like right when things start happening. So the market likes to, you can use these, I call them blanks, as kind of a guide. If you see those, is the market likely to go back and fill those? Yes, at some point it will. Trying to think of like a good example. Earlier example today, I noticed we had a blanket like 48 and the market had come off some. I knew at some point this market's going to turn around and we're going to revisit 48. And in fact, we did. I can't remember what time it was exactly. But you can use this type of information. It's kind of easier to show you when the market's like live. But so you kind of use this information when you have those kind of announcements, or you have any kind of data that's coming out, or if you have a news driven, OPEC comes out and says something, and you just see the market rip. You'll see a bunch of these unfinished auctions. So at some point the market's going to come back and re-auction those. The market doesn't like incomplete auctions like that. So that information is useful, not in necessarily in getting in or out of a trade, but kind of knowing, where the market is likely to revisit. And then if it, coincides, or if there's another level that you're looking at or whatever, when you're trying to make a trade decision, that's where that type of information would sort of come into play.
Yeah, interesting. Thanks. That's really interesting. You've taken us through the TPO chart last time and this footprint chart, and both of which are not indicators that I've used in the past. It looks pretty interesting, and definitely want to keep a closer eye on that. So take me through on a different note. Crude's been pretty volatile the past week. We've had a lot of different headlines, a lot of different stories. We've had the inventory report last week. We had the storm in the Atlantic Ocean. Then we had the report today. Take me through what you think the market's been trading on and what sort of opportunities you're seeing.
I mean, I think the market right now is being, there's a lot of articles coming out right now saying, we're going to be out of oil because of Iran, So I think the media is sort of hyping up this Iran situation. And I think that's what currently the market's reacting on. Now, do I necessarily think that that information is 100% correct? I don't. I mean, we've had sanctions on Iran before too. There's never has it gone to zero. So I think that's the big hype right now, and that kind of that, the media is kind of playing into that fear. But given that, at this, we all know at this, 71-70 area is kind of sticky for crude. So
right.
I'm kind of looking, for short opportunities in that area. And we also know November elections are coming up. We know, Trump doesn't like oil this high, regardless of, he's going to do whatever he can to try to make sure that, we're probably under that for election time, whether he is able to or not. But, I think that there is a lot of that too in kind of traders' minds. But right now, I think really it's, I think we're kind of getting toppy up here.
So you're looking for opportunities pick your opportunities to go short.
Yeah, absolutely. Especially looking at the TPO chart, we have a ton of damage from the other day. I think I posted a chart in the chat room this morning. We've got a bunch of weak spots from yesterday. We've got a weak bottom on today, bottom on the day before. So right now I'm looking for opportunities to go short.
Yeah. And then what was this? So yesterday we had API data, and I believe crude actually traded a little lower on that API.
Yeah, they showed a build. And then today showed a draw. The thing with API and EIA is API is from a trade association, and it's a voluntary query, whereas EIA is mandatory reporting to the government. So a lot of times you will see discrepancies between the two. And what happens is they both have to reconcile. They reconcile at API will reconcile with EIA at the end of the month, right? So their numbers are the same. So sometimes in between you get really off numbers. That's why you often see discrepancies between the two.
Yeah, and especially also with the recent, preparing for the storm, things of that nature.
Right. Anytime you have a holiday, it makes it worse, or things like the storm or anything like that.
Yeah. What about other markets? I know you pay close attention to a lot of the other markets as well. We've had U.S. yields moving higher, but at the same time, the dollar weakening. We have the Fed coming up next week, which seems to be priced in nearly 100% that they will be hiking. What other opportunities are you looking at right now?
I mean, right now, well, I trade euro, so I'm kind of looking, it's kind of getting toppy up there too. I'm kind of, a trade I really like is Soma days. The Soma day trade, because usually you'll have dollar index up because you're pulling liquidity from the market, and ES is down. So that's one of my, it's usually the 15th and 30th of every month. It's only the 30th this month. So I think that's a good trade opportunity. I'm trading that day. I don't trade U.S. Treasuries, but it's obviously a good trade day for those two.
Yeah. What do you make of the fact that yields have, continued to move higher? I know you're not trading them, but, it's probably been one of the centers, all the markets are talking about it, at least, whether it be financials in the equity market or, the euro, like you said. It seems like typically in the past, the correlation has been most often, yields higher, dollar stronger, but actually euro's been moving higher more recently.
Yeah, I mean, again, correlations are kind of off. I mean, there's lots of theories that, as soon as, yields get so high, the market's going to crash. I think right now, like I said, and we talked about this before, a lot of the correlations are not correlating anymore, right? So I think you have to, instead of, kind of just take each market and look at that market as, what is happening in this market instead of trying to really correlate it to another market, because I just don't think the correlations are there in the market. And we're also, we have quantitative tightening. We have, we're going through something we've never really gone through before. So it's not a wonder to me that, kind of these correlations are off and the market's a little bit out of whack, and it's rippling through, obviously, emerging markets, things of that nature as well.
Yeah, absolutely. Absolutely. Yeah, it's very interesting. A lot of different things going on right now. We have equities near all-time highs here, shaking off a lot of different headlines, yields continuing to move higher, and energy markets continuing to move higher. We spoke about a few times this week, energy markets, crude's up about 15% for the year, whereas the metals are down pretty heavily, anywhere from 5 to 20-ish%. And the commodity markets as a whole, agriculture's down. So there's been a lot of different opportunities and a lot of markets moving based off of a lot of the different news. So it's a lot of opportunity out there.
Yeah, definitely. Definitely.
Oh.
I mean, I think at the end of the day, energy markets, I don't think they're going to let, it's a manipulated market. So I don't think they're going to let this get out of control, so to speak. Because, a lot of countries are hurting. India called Saudi Arabia and basically said, help us. Right. So and if you look at, emerging market currencies and things like that, if you look at, say, Brent prices in their currency, I've posted charts on it before. I'll post another chart, but it's really insane. I mean,
yeah, well, the spread between Brent and WTI about $9.50. That's been a significant mover, and yeah, that's pretty interesting to keep an eye on as well. We've been talking about that.
Yeah, for sure.
So, all right. Well, thanks a lot. Great information. Looking at the footprint chart last week, you took us through the TPO. Today, the footprint. Thanks a lot for the information, and we'll definitely continue to keep an eye on it and talk to you soon.
All right. Sounds good. Thanks.
All right. Thanks, Tracy.
All right.